Hello everybody, and welcome to this month's August newsletter video update. It has been exactly a month since my last newsletter video, and a lot has certainly panned out in the market during that time. So I have lots to share with you, including an update on some of my trades. But before I get started, I just need to go through my usual housekeeping and remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades that I will share with you are for illustrative purposes only, and I'm just showing you how I view the current market, and I'm sharing this with you. Now let's move on, and I'm going to go over to Metastock now, and we're going to have a look at the current market action. On the screen here, I have the ASX 200, and we have certainly had a phenomenal rise in the market over the last month. We have seen the Aussie market get to the highs of around this resistance level here of about the 4440 mark, and then it collapsed and fell all the way down to just under the 4,000 mark. So there's a 10% fall in here, where it then churned around sideways before it managed to start to move higher and break to new highs, and it has nearly recovered all those losses that it made and has moved higher. And this is frustrating, watching the market dropping and then bouncing back up. So you need to have a trading system that's going to allow you to profit through these sort of moves in this sideways trending market. I had a phenomenal run short selling through this period with my daily swing trading system, and then when the bounce came, I was exited out of my short trades, and then I've been net long in the market again. So it's all about going with the flow of the market and moving in the direction that the market is moving in as well. But we're getting up to a very interesting period again in the Aussie 200, and we're heading up to this price point here. We haven't been beyond this price point since over here, July 2011. The market wasn't able to get beyond the 5,000 mark for quite a long period of time, and that's where it collapsed and moved lower. And it's been zigzagging around ever since. So we're now moving up to this point over here, and for the market to remain really healthy, we need it to move beyond this level over here. So it's going to be interesting to see whether it can do that, or we're just going to see the same thing happen over here when it got up to this point where it collapsed back down. Of course, I have no idea what it's going to do. All I can do is to continue to follow my trading plan rules, and if a stop loss is hit or I get an aggressive exit strategy, I just take action. But what is also interesting is the US markets are getting to a very key point as well. I'll just close this down. And on the screen here, I have the S&P 500. Now, the S&P 500 has also had that phenomenal run up after it had its drop back down. And now it's also at a key resistance point, which it touched over here before it collapsed, came back up, and then it really collapsed down again. So you've got both the Aussie and the US S&P 500 now at key resistance points. And the last time the S&P 500 moved beyond that point was early 2008. So we're now at a key resistance point in the US markets as well. And it's going to be very interesting as well to see what pans out. Because if the markets are going to remain strong, it has to push through this level here. And it could happen tonight in the US markets, it could happen next week, or it may not happen at all. I simply don't know. But in the meantime, I've certainly been enjoying the drop down that occurred in the market and the ride back up. Now, last newsletter I shared with you 2 short trades that I had open. And of course, they've been exited with this rise back up in the market. So let me show you what's panned out with those trades. I'll just close this down. Okay, so this chart here is a chart of Sims Metals. I entered short on the 15th of May at 13.04. This particular share had been going sideways, and when it broke through this key resistance level, and then it came up in my daily short swing trading system, I entered the trade. So you can see an arrow on the chart here, and when it came up, I entered short, and then I stuck with the trade until it hit this key resistance level at the round number of $10. It showed a slight bounce, so I decided to sell half. And that way, if the share did bounce up very strongly, I had protected some profits. If it didn't and it fell through, I still had half the trade open. And what then panned out was it actually did fall through the $10 mark, zigzagged around for a while before it really then did fall, and then it got resistance from the $10 mark and started to fall away. So that was a strong sign then for me to short sell some more. So because I had sold half, I re-entered back into the trade and short sold some more. It then fell quite strongly and started to build up a bit more support around this level. And that's where it did bounce up. And I was taken out on the 8th of August at $8.82 when my stop loss was hit. There was no reason for me to exit prior to that. I was aware that the share had made 2 equal lows and it had moved up slightly, but I didn't know if it was going to move higher or fall back down. And as it turns out, it did move higher and my stop loss was hit. So overall on this trade, I held the trade for a total of 85 days. I made a 20% return on the total trade size, and as this was a CFD trade, the margin amount was 10%. So if you're interested in the returns based on the margin, then there was a 203% return based on the margin amount. If it was a share trade and you had to put up 100% of the trade, then it would have been a 20% return. And I always like to look at things based on the return on the total trade size. And I made 3.6 R. And when I talk about R, when I open a trade, I don't want to lose more than 1 R. And that 1 R is the maximum amount of money I want to lose in one trade. So I want to make sure that my losses never exceed more than 1 R, but I need to have some big multiple wins in order to make some big profits in the market. And this was one of those where I made more than 3 times my risk amount on this trade. And I haven't seen trades like this for quite some time. There really has not been those big winners out there. And even in the last financial year, the largest R multiple I got was about 2. So to finally have 1/3 was very exciting. And it's also a good example of a trade to show you how I did a series of different things throughout that trade, including selling half and re-entering back in. And then my stop loss just took me out of the trade. So I want to move on to the other trade that I shared with you in my last newsletter. I'll just close this down. And this particular share is PanAust. I short sold this on the 10th of July at $2.51. As you can see, it had been moving sideways and getting support at this level, and then it broke through and came up in my daily short system. It continued to move lower, which was a very healthy sign, and then it started to pause at a support level here. And it had a strong rise off this support level. It rose up and then it started to fall away. And I also tightened my stop loss up at that point so that if it did move higher beyond this high here, I no longer wanted to be in the trade. So it managed to fall lower, but then it bounced up quite strongly and I was taken out of the spike on this candle here. So I exited on the 2nd of August at $2.45. Now, it wasn't a big winner in here. It was a small win. And I will always have some small winners and some small losers throughout my trades. But it's when you get onto the really big winners that make it beneficial. So I held this trade for a total of 23 days. I made 2% on the total trade size and 22% on the margin. And it was only a very small amount that I made, so it wasn't a big winner at all with only a 0.1 R multiple. So as you can see, I was exited out of my short trades, but the market was now getting stronger on the long side, and I had started to build into a couple of long trades while these short trades were running. And then eventually I got stopped out of all my short trades and I was net long in the market again. So just to share with you one of the long trades that I currently have open in the market, I'll just close this down. Here's a chart here of a current trade that I have open. I'm not going to disclose the share name because this trade is still open. The share itself hadn't been going anywhere for quite some time. I'll just go to a weekly chart to show you what's been going on. It is a share that has fallen quite heavily over time and had built up support level at this point here, where it touched a series of times over here and touched over here too. It also built up a resistance level at this point here, with the next key resistance being at this point just here. So when it came up in my daily swing trading system, when it broke out through this resistance level here, I liked what I saw, but there wasn't volume strength on the trade yet. The volume hadn't moved above its average, so I was a bit hesitant with taking the trade. Now the next day, it moved higher again. It came up in my daily swing trading system, and this time it had a sharp volume spike. So I was more confident with entering in the next day. So I bought in on that second signal after it had moved beyond that resistance level on the 8th of August at $4.12. Now its next resistance level was coming up to here, but it was still far enough away for me to have a profitable trade on if it did reject this resistance level and start to fall away. But as it turns out, there's been no rejection and it's shot through this resistance level and is now trading above it. Hopefully it will now get support from this resistance level and remain above it. In the meantime, my stop loss has moved higher, and I'm also aware that a dividend is coming up in about a week's time for this particular trade. So what I do when dividends come up is I do widen my stop loss up to cater for the dividend. So I'm at a point now where I may tighten my stop loss up and bring it close to the support line, but I will look at widening it up if I still have this trade open when the dividend comes up. Because when a share pays a dividend, it actually gaps down, and there's nothing worse than having it gap through your stop loss and being taken out of a trade because of a dividend drop, only to watch it bounce again after that. Now the great thing is, because I trade CFDs, when the ex-dividend day comes, I get the dividend on that day. I don't have to wait for the pay date. So that's another benefit of trading CFDs as well, and that's what I do with my daily swing trading system. So I'll keep you updated on how this trade progresses in my next newsletter. But in the meantime, as you can see, a lot has happened in the market just over a short period of time. So make sure that you have a trading plan and you adhere to your trading plan rules. If you need some help, don't forget about my book, Smart Trading Plans. It's a step-by-step guide to developing your trading plan, and I give you a trading plan template as one of the free book bonuses, as well as a position sizing calculator. So you can buy that off my website or through Amazon in Kindle format. And don't forget, when you do visit my website, www.smarttrading.com.au, to also sign up for my free special report and get my 10 tips to smarter trading. I also have plenty of information on my website, and you can also learn all about my trading systems and strategies, including the daily swing trading system that I've been talking about in this video, through a course I have that's called the Smart Trading Plan and System Development course. That's the course in which I share everything with you and I give you the codes to my trading systems. If you have any questions at all, feel free to contact me. My contact details are in the Contact Us section of my website. So I hope you've enjoyed this video and picked up some more tips. Until next newsletter, goodbye for now.